Welcome everyone. Today, I'm going to walk you through my 5 main stock picks for 2021. Let's get started. Welcome back everyone. So in a crazy market of 2021, with Bitcoin now at almost $40,000 per coin, you have PE ratios in the market of almost 40, which again is essentially a valuation metric that we know historically is around 15, so almost 3 times the premium that we usually see. We have all sorts of political changes, all sorts of pandemic issues. It's really difficult to come up with a strategy that isn't just a gamble, right? And so what I'm going to do today for you all is I'm going to go through my 5 stock picks, and 1, why I'm picking these, and 2, what percentage of my portfolio are attributed to these stocks. Okay, so the way I go about this, and I talked about this in my other videos, and I'll put this up here, a link that will walk you through the key metrics at a very high level that I look at to essentially first gauge the value, if there is value in the stock, and then 2, I also look at a number of other indicators to understand what the market is expecting of the company. I look at the earnings reports, I look at the competition. I try to understand if I'm buying a stock that is going to be a continued growth stock, but also have some value behind it too. Okay, so a lot of these stocks come from or these picks come from a standpoint of 1, value. Am I getting a good value for my purchase? And then 2, what is the growth trajectory in the future? Okay, now the first 2 are not stocks, they're what is known as ETF. And ETFs are essentially a conglomerate of stocks within one, right? So if, for example, you want to pick all stocks in the S&P 500, it's going to cost you a pretty penny to do so. But you could buy the ETF ticker symbol SPY to essentially track or mimic that of the S&P 500 for a much lower cost. Okay, so that's the benefit of an ETF. The downside with an ETF, it does come with a small expense ratio, and what that means is you're paying the people who manage it a small percentage, usually between 0.5% to 1%. Anything above 1% is way too much to pay. So keep that in mind. So the first one I have here, and I was talking about this months ago when I thought it was substantially undervalued. It's a ticker symbol IEMG. Now this is a international exposure play, so emerging markets, non-US, which is really an area that was undervalued for some time. Even today, the PE ratio is 25. And again, if you compare that to the S&P 500, which is a 38, you're looking at like a 30% reduction in premium for a stock that has diversity. It's got a 1.8% dividend yield, so you get some cash flow from that. And generally, it's been going gangbusters as people are beginning to find value in other stocks outside of the United States. So IEMG is my first stock in my portfolio, and I have about 18% of my overall portfolio in that ETF. The second one is a value-focused ETF. Now, again, I could sit all day and try to find the picks that have value, but what I've been focused on is some key picks and then another ETF to really track the value stocks in the market. Now, this ticker symbol is VTV, right? Now, it's a value-focused ETF, very low expense ratio, well diversified, very liquid, and it has a nice dividend yield of 2.5%. Additionally, the PE is only 28. So again, you're looking at a 30%, less expensive from a ratio standpoint than the S&P 500. So a lot of value there. I have about 11% of this stock in my portfolio. Now, the next 3 are my big picks, and it's interesting because I've been focused on these 3 for some time, and my biggest gamble of 2021, if you want to call it that, is with Alibaba. Alibaba has not penetrated more than half the market in China. It's essentially, when you look at it, yes, it's a product company in terms of selling like an Amazon, but it also has a massive banking arm to the business. And that's actually why Jack Ma, as of late, has been in troubles, because the Alibaba banking arm has really taken over the banking segment of China, causing a lot of friction with the state banks. And that is essentially why he's in trouble right now, or at least one of the reasons, right? And so there's a lot of room for growth in this. There's a lot of risk because of the political dynamic, but that is a good stock to be picking if you're okay taking on some risk. Now, from a PE standpoint, it's a 33, so still cheaper than the S&P 500. It doesn't have a dividend, but the upside on this stock is substantial. Okay, so I have 30% of my portfolio in Alibaba, a rather risky position. but I see a lot of upside for the stock. It's been beaten down recently. And so if you're going to buy it, this might be a good time to buy it. The next one is a very stable bank. And banks have been out of favor for some time due to COVID, unknowing of what's happening with the foreclosure crisis, which has been a good opportunity if you buy a bank that has a strong balance sheet, such as Bank of America. Now, what's interesting is not just me, but also Warren Buffett has put a substantial amount of his portfolio in this stock. Okay, and now the PE ratio is at a 16, so almost one third of the S&P 500. So you're getting a really good discount here on the stock. It's a 2.2% dividend yield, and I have 20% of my portfolio in the stock. I think there's a lot of upside for Bank of America. I don't think the foreclosure crisis is going to impact the banks, the big banks, as much as we think. If you look at the balance sheets of banks, the community banks are the ones that have the most exposure in the crisis, not these big banks. These big banks have learned from the last crisis how to manage their balance sheet. And I think this discount that you've seen on Bank of America will come back to reality and realize that it shouldn't be that discounted. So a lot of upside here of Bank of America from a purely value standpoint. The next one, can't say it's a unique pick, but when you look at the product segment, this company has continued to keep their consumers buying the latest gadgets, buying the latest products at premium prices. They're on wait lists, back orders. They're doing a phenomenal job. Tim Cook is managing the company better than expected. Apple, with a relatively high PE of 40, very pricey, has seen a phenomenal growth. They're substantially focused on China and emerging markets. They have a big upside here. I have 21% of my portfolio allocated to this. Again, Warren Buffett has a big chunk of his portfolio in Apple as well. So they have a small dividend of 0.6%, nothing fancy, but it does provide some cash flow. And so overall, again, the summary of my picks, I have the international exposure, right? IEMG. I have the value exposure from a value stock picking standpoint, ticker symbol VTV. I have Alibaba, Bank of America, and Apple. Now, there's a variety of other stocks, and I'm not the most diversified because I'm also investing my money in real estate and private money loans to ensure that my capital is out of the bank. There's a lot of risk to cash right now in terms of what it's worth due to inflation that's coming. So get your capital out there. Inflation is going to increase asset prices across the board. Put your money into assets to produce the wealth, produce the cash flow. So again, here's my stock portfolio. I am still investing in real estate. There are some deals out there, and I am still investing in private money loans for cash flow. So that's my portfolio in 2021. I think I'll do just fine. That's my hope. And I'm curious to know what you're doing, what your strategies are. So if you have any to share with us, put it in the comments below and be sure to like the video. Thanks.